Hello and welcome back to Kitco Mining's Dig In Deep with me, Paul Harris, in which we take a deeper dive into the mining and exploration news. Joining me today is John Feneck, founder of Feneck Consulting. John, welcome back to Kitco.
Thanks for having me again, Paul.
Excellent to have you back. Before we start, please note that Kitco Metals and Kitco Media provide news services only and do not offer tax, legal or investment advice. The opinions expressed here are those of the contributors and do not necessarily reflect the views of Kitco Metals. For complete terms and conditions, visit kitco.com. And of course, if you like what you see, don't forget to hit that subscribe button. John, let's start with gold. The gold price has been paring back from record highs of over $2,650 per ounce. John, is this a healthy and expected pullback or perhaps something else?
I think it's a healthy pullback, Paul. We actually topped around 27.08, if I'm not mistaken, on an intraday. It basically needs to pull back a little bit here. I mean, you and I have been doing this a long time, and we haven't seen a year like this for gold as a commodity in many, many, many years. So a pullback to even 2,500 here would be healthy. I'd be concerned if we break 2250 to 2300 to the downside on a few closes, because to me, that's sort of the new floor. If you look at how the commodity has traded, it's really held that level all the time, for weeks and weeks now. So that would be not great. And if that were to happen, I think silver would probably retest that 26 to 27 channel.
Now, John, how do you think the rest of the year will play out for gold and indeed for silver? Will we have some more interest rate cuts?
Yeah, so right now we've got an 86% chance of a 25 basis point cut from the Fed November 7th. So that's in the bag as far as I'm concerned. The concerning thing is they've taken a 50 basis point cut completely off the table. So the market is digesting that. I think that's contributing to a little bit of the selling pressure here, Paul, in both commodities. Obviously, also the China stimulus news is putting pressure on both commodities. China is a huge consumer of both, and they had some not so wonderful news on October 8th, and that stock market was down huge. So you're going to get some volatility, as we've talked about on your show before, in October into the election, right? And so this is not something where we weren't prepared for. November 5th is obviously the election. You've got the BRICS October 22nd through the 24th. I think that could be meaningful. But it's just that time of year, right? You're entering a difficult time for equities in general in October seasonally. And then you've got November with the big news in the US, followed by the Fed 2 days after.
Now, you touched on a few interesting points there. The US Federal Reserve, elections, BRICS. We've also in a worldwide, there's conflicts and potential for more conflict. What are the things you think would potentially drive gold higher to $3,000 per ounce and possibly beyond?
So interestingly, many of these bankers, meaning the big bankers in the U.S., have gotten the gold price wrong for many, many years. And just to give you an example, back in 2016, I distinctly remember Wells Fargo having a $900 to $950 price target on gold when it was trading at $1,050 to $1,100. So I don't put a lot of value in what estimations are out there, but it is positive in my view to see some of the larger banks coming around to a higher gold price. And to your point, B of A has a $3,000 target for next year. Citi has a $3,000 target next year. So I don't think $3,000 gold is around the corner, Paul, for 2024. I think it's more of a 2025 phenomenon, but it's definitely on the table. And at $3,000 gold, so many of the stocks that we own are going to do just tremendously well. I'm shocked as I sit here right now that we're not seeing more upside in some of these gold stocks, especially with earnings around the corner, which we'll probably get to talk about a little bit today.
Well, yes, exactly. That's I was going to go on to that, John. Some companies have started to report their third quarter production. The financial results are going to start coming in a couple of weeks' time. And presumably we'll start to see some of the impacts of the higher gold prices in those results. What are you hoping to see in third quarter results, John?
So GDX, which is the largest ETF out there, over 15 billion in assets, that encompasses a lot of the producers that we're talking about. Newmont, Agnico, and Barrick are the top three holdings in that, and it represents almost a third of the entire ETF. So you have to watch those three stocks. The tickers are NEM, AEM, and Gold. And just see what kind of numbers they put up here in October. I'm going to argue that they're going to put up tremendous numbers because they've been trending now at a much higher gold price, yet their costs haven't elevated much at all. So of the three, Newmont had the highest costs going into this earnings season. Their all-in sustaining cost per ounce is around $1,570. We'll see. I'd like to see that moderate a bit, or at least stay the same. But still, again, with a higher gold price, you're clipping a higher margin. And that's really important for investors to note.
And in that margin mix as well are fuel costs, and fuel costs have come down, and fuel can represent up to 40% of the cost of a mine. So with fuel prices easing, you've got potential margin expansion there as well, John.
Totally agree with that.
Okay, now we had a big M&A transaction announced last Friday. Core Mining is to buy Crest Metals for $1.7 billion in an all-stock deal, which includes a 22% premium. Core CEO Mitch Krebs told me earlier this week the deal is a once-in-a-lifetime opportunity, as adding the high-grade Las Chispas mine in Sonora, Mexico, will boost its 2025 pro forma production to an estimated 21 million ounces of silver and 432,000 ounces of gold, making it the largest silver producer by ounces, but also by market capitalization at around $4.5 billion. You can see that video on the Kitco Mining YouTube channel. John, Core is arguably getting one of the best silver assets in the world with this deal. So does that premium seem a little bit thin to you?
It's a little thin. I will say, as a shareholder of both companies, SILV, Silvercrest, has been a great one to own. So we've made a lot of money. And that's because, again, Paul, I keep in touch with Chris Ritchie, the president there, on a monthly basis. I've talked to Mitch Krebs a number of times since 2008 when I first cold called him. So I know the stories pretty well, and I think it is accretive to both shareholders, right? And so we've been recommending to people to stay in CDE Core once we get the deal done in 2025. Yeah, I mean, you know how I feel. I think in a silver market that's headed to 35 plus, in my opinion, next year, I would have liked to see Silvercrest maybe hold on a little bit longer. But look, it's accretive for both. Both are leaders in our sector here. If your listeners don't know this, Mitch Krebs actually was the head of the Silver Institute, for a while, and CDE is one of those stocks that has tremendous torque to the price of silver. So take a look at 2016. I remember getting filled, Paul, at $1.40, $1.50 a share in January of 2016 when I was at a Merrill Lynch conference, and I was like, "What is going on here?" And then the stock just took off. I made 7x or something that year before I sold. It was a tremendous run, and it was violently up. So I think as higher silver prices, this really improves Core's balance sheet, and I think it's a good transaction.
Now, in terms of Core's balance sheet, as you point out, it doesn't have the best balance sheet at the moment, but that will change with this deal. The company's getting, $122 million in cash and bullion. It will get great leverage there. Yet its stock sold off on the news. Why do you think that was, John?
Yeah, that's sort of the knee-jerk reaction, Paul, in a lot of these transactions, right? We saw First Majestic AG take over Gatos not long ago, and the same thing happened. You're going to get a haircut because the premium, while it's not large, is still going to get shareholders to say, "Hey, you know what? I don't want to hold." I was hoping for Silvercrest's upside, right? And so now that that's not going to happen necessarily, they will sell before the deal gets announced. As I said, it's $6.05 here on CDE. The top for the year was $7.72. So it has come off quite a bit here quickly. I could easily see, looking at the chart, a retracement back to $6.60 to $7 before year end. So that would imply a 10 to 20% move here, in 3 to 4 months. So we're not going to panic sell unless, something else comes around with their earnings, right? They have 5 other projects, so you have to watch that news.
Now, John, as I mentioned, this deal lifts Core to the top of the silver class. Is that important? And if so, why is that?
Well, this will help them with a number of things in the ETF world, right? So they've already historically been holding in GDX and GDXJ, but I think both ETFs could own this stock now. And if you look at the three major silver ETFs, which are SILJ on the small to mid cap side, SIL and SLVP on the large cap side, you're going to see them included more in these type of products, right? Because the combined company now, as you pointed out, Paul, is going to be so powerful in terms of producing silver ounces. So if people don't believe me, look at Pan American. PAAS is the ticker in the US. PAAS has been the number 1, 2, or 3 holding in those 3 silver ETFs for most of this year. So what that means to investors is that when silver really takes off, these ETFs have to buy the portfolio, right? And so you want to look for that kind of inclusion as these ETFs rebalance.
Okay, now this deal comes hot on the heel of First Majestic Silver's $970 million bid for Gatos Silver to get the Los Gatos mine in Chihuahua in Mexico that you mentioned, John. With these two assets out of the way, will there be more silver consolidation to come? And if so, who do you think will be the prime targets now?
That's a good question. Look, I think you're going to see a lot of consolidation in silver. As we record this, there's over 90 silver juniors in Mexico alone that are closely watching the Mexican news here, right? So there's a ton of silver explorers, developers, and producers. We spend a lot of our time, Paul, in the silver explorers and developers because of the low prices right now as value managers. If you look at Abra Silver, ABBRF in the States, ABRA in Canada, I think John Miniotis has done just a tremendous job since he's been at the helm the last few years. He's really grown ounces in the ground, as we say, right? They've taken it up to 258 million ounces of silver now, which is insane. And the stock's trading at $1.90. So I think that has a lot of potential into 2025, 2026, if they don't get taken out first, right? Because silver companies are going to be circling a company like that, I think. And you've seen Kinross put a 4% position on earlier this year. They've never been in Argentina before. Another one would be Aftermath Silver, AAG in Canada, AAGFF in the States. They have about 148 million ounces of silver the last I looked. It's probably a little bit higher now. But they announced another piece of news in February, which really got my attention, about manganese. They have 99.9% battery grade manganese. So that really diversifies their potential revenue stream in years to come. Additionally, they presented at Beaver Creek last month, where you and I were, and Eric Sprott put another $5 million into the stock, and the stock really responded. He literally called them that Monday following the Beaver Creek, symposium, and put another $5 million in. I think that was around September 16th. So you look for those kind of things. Right now, Eric owns 19.2% of the float. Silvercorp SVM owns about 4% of the float. And you start doing the math about what entities like that own, what Michael and his team own, what I own and my followers own, and we're not going to get taken out cheaply. There's a possibility it gets taken out, but we're not going to let it go cheaply, which is good.
Okay. Elsewhere in the gold space, Newmont said it will sell its Agnico operation in Ghana to Zijin Mining for up to $1 billion in cash. This follows a recent announcement that it's selling 2 assets in Australia for up to $475 million. Newmont seems to be making great progress on its 6-asset divestiture program, which it announced earlier this year, from which it aims to raise up to $2 billion. Next up will be the North American assets, which include Cripple Creek and Victor in Colorado, Coffee, Eleanor, Musselwhite, and Porcupine. John, as these assets clear, will that remove an overhang on M&A transactions in the gold space? Will it open the door for other transactions to start to occur?
Yeah, I think so, Paul. I mean, this has been news now for months, and once we get this transaction or series of transactions out of the way, I think that will open the door.
Now, Zijin continues to go big on M&A and building its asset base in the gold space. It's firmly up there now amongst the biggest gold producers. Why do you think, or what do you think is driving its strategy?
China. Zijin is a Chinese company. China has done just a tremendous job of accumulating gold ounces any way, shape, or form, right? I mean, it's just another situation where the U.S. is far behind when it comes to commodities, in my opinion. When you look at China's dominance in other commodities, it's just ridiculous. As you know, Paul, I was at a critical minerals conference I was speaking at in April in DC, and the vibe coming from different CEOs that I've known for a number of years and trust was that the U.S. realizes they're behind the eight ball here, and they're willing to do more in terms of DoD money and grants and those kind of things, which I think is going to be meaningful for a lot of stocks, not just gold stocks, as we move forward. But I'm happy to give you an example of that if you'd like.
Sure, let's go for it.
I talked to a company there that has been in touch with the government on a regular basis because one of the metals they explore for, tungsten, is in very short supply. Tungsten actually had zero. The U.S. produced zero tungsten last year, zero. 91% of it was produced in China. So something like this that is used in ammunition, that is used in body armor, these are the kind of things we've mentioned on your show once before that as you see broader conflicts get broader, it's like, where is all this stuff coming from if China owns 9/10 of the entire production, right? So a company like that, Guardian Metal, which is GMTLF, it doesn't have a Canadian ticker, but it does trade on the London GMET.L, is something we really have been adding to over the course of 2 years now on dips. And recently they did a financing. So as you know, Paul, when a company does a financing into a strong price, it's going to get hit. And that's really where the stock is right now. It's trading at 34 cents US, but it topped out at 52. So we look at those opportunities and say, okay, a haircut is merited, but a haircut of 30+%, it's just I love this sector. It's so inefficient. So you end up buying stocks like this on dips that you follow and trust and understand.
Excellent. And information discovery, obviously key both ways. Elsewhere in the gold space this week, US Gold Mining updated the resource estimate for its Whistler gold copper project in Alaska in the USA to more than 10 million ounces of gold, including a 117% jump in indicated resources to 6.5 million ounces. The stock jumped more than 30% on the news. John, it used to be that a company needed to post a 1 million ounce resource to move the needle and get noticed. Now it seems companies have to produce resources of 5 million ounces or more. Why do you think that is? Why the change?
I couldn't exactly answer that, Paul. I really don't know because I'm not a major. I'm not out there talking to these little junior companies and drawing the line in the sand at a certain number of ounces in the ground. For us, that number is not 5 million. It's more 3 to 4 million ounces. That's where we start getting really interested with our stocks. 5 million is clearly 5 million plus is a big number. But when you look at certain stocks that already have that, like a Banyan or something, I mean, there's so many things that can go wrong in our sector. You have to be careful about just looking at the ounces in the ground. You have to look at the jurisdiction. You have to look at how much cash they have. What is the plan going forward? It's amazing to me that companies don't put their plan in their sales deck. Like if you look at Abra Silver's website right now, John Miniotis has put it out there. Here's 2024, 2025, 2026. You can see a path, and that's what I look for a lot of times from a company, not just, ounces in the ground.
Now, things that can trip projects up include the development of infrastructure. Whistler will also need to develop an access road, which is subject to a National Environmental Policy Act, or NEPA, permitting process. Further north in Alaska, Trilogy Metals is bogged down in the permitting of its road, also a NEPA process. John, will permitting slow the advance of Whistler too?
I don't know. I will just say that Trilogy TMQ has been a disaster in terms of share price. If you look at the chart, it was heavily promoted in the US by someone that I'd rather not name. But, when you look at mining stock influencers, a lot of these people aren't accountable at this price, right? And you have to be real careful with anything that says Alaska and access road. If you look at the TMQ news, just go back on Ambler a year or two, and you can just see they've continually updated the market, which I think is positive. But also they've just had numerous problems, and the stock has been stuck in the mud. So, we're very selective, Paul, when it comes to the U.S. If you look at, Alexco, I think that was a disaster. Also in that kind of region because of different reasons. So you just have to be really careful when you're investing in these stocks. I'm much more comfortable in different parts of the U.S. Right now. So that's kind of how I feel on that.
Okay, let's move on. You mentioned him previously, John, Eric Sprott Watch. America's Gold and Silver has agreed to consolidate Eric Sprott's 40% interest in the Galena Complex joint venture in Idaho in the United States for 170 million shares and $10 million in cash. Based on the valuation of the concurrent financing, the stock represents a $68 million Canadian value. America's Gold and Silver will also provide Sprott with monthly silver deliveries of 18,500 ounces for 36 months starting in or around January 2026. The joint venture with Sprott was created in September 2019, with the mining entrepreneur investing an initial $20 million for his 40% interest in the Galena complex. Paul Hewitt will be appointed chair and CEO. A 40 million Canadian bought deal private placement and debt financing will help restructure the company finances, and it anticipates that 80% of its revenue will be generated from silver from the second half of 2025 onwards. John, with the silver price at 10-year highs, it seems to be a good time to rejuvenate America's gold and silver.
Yeah, we're shareholders in full disclosure. The ticker is USAS. I didn't see this news coming. I don't really keep in touch with the company much. This is sort of one that I just bought, Paul, because it was so darn cheap. We were buying it heavily between 21 and 24 cents US. As we record, it's around 36 US. It's up nicely today. But they are, seemingly turning the corner. And just to clarify your comments, when you hear restructuring, that's usually a bad word, but I think this one might be okay. Anything that Eric Sprott's involved in is something that investors love to take a second look at, right? So I think this is healthy news for them. And they just need higher silver prices like everyone else. So, that's kind of our reasoning for buying it at where we did, was that this is an out of favor silver play like so many that are actually producing.
Well, Eric's been a busy boy this past week. In addition to America's Gold and Silver, he invested 5 million Canadian into Outcrop Silver and Gold, which has the Santa Ana project in Colombia, to increase his stake to 19.3% there. He also invested $6 million into Heliostar Metals, which has a gold project in Mexico, and 300,000 Canadian into Gold and Spike Resources. John, it looks like Eric is going on another junior buying spree.
Agreed. And good for him. We need more Eric Sprotts in our sector for sure. Rob McEwen, to his credit, spent a lot of 2023 doing the same thing. I mean, if you look at his track record, he put a ton of money. He put 2 tranches into Power Nickel, PNF in the States. He bought a lot of stocks that we track or own, and raised his stake in a lot of names. Eric has been doing this for years, obviously. We're seeing guys like Robert Friedland get more involved now on the investment side, which is really positive. So I think this is a really exciting time, Paul, and it doesn't feel like it for a lot of juniors. I do understand that and understand the plight. But, as an investor, you have to understand these things will take time. Like USAS, no one wanted it at 21 cents. Right now, everyone's clamoring at 36 cents today to buy shares. It's like these things will develop over time if they can survive this cycle, which a lot of them will.
Okay, let's end with another M&A deal and a biggie, a lithium deal this time. Rio Tinto is to buy Arcadium Lithium for $6.7 billion to become the third largest lithium producer, with lithium mines, processing facilities and deposits in Argentina, Australia, Canada and the US. John, this is one hell of a bet on a material used for electric vehicle batteries, whose uptake has been stalling. What do you make of Rio Tinto making this big move?
I don't really have an opinion on that, Paul. I don't follow. I didn't follow that story. I don't know either of those stocks. But I will say that lithium seems to have bottomed. If you look at LIT, the ETF, that may be why some of these majors are getting more interested now, because it was a falling knife for 2+ years. Lithium got way ahead of itself, and now it had a comeuppance over the last 24+ months. And now some of these names are starting to be really, look really attractive. We've actually started a position in a couple of these names in overseas, really lithium projects that just seemed like they've been thrown out the window, but they will have, some upside as the next year or two progress.
As an illustration of how far lithium came off over the past couple of years, Rio Tinto is paying a 90% premium for Arcadium, which is comfortably below Arcadium's high of last year, which perhaps reflects, as I say, how much lithium prices have cratered this year. Prior to this deal, Arcadium shares were down 30% this year. Do you expect to see other bigger companies positioning themselves in the lithium space, taking advantage of these sort of bottom prices?
It's really hard for me to say. I like I said, I think technically lithium equities have started to bottom, which is positive. So that might be getting the Rios of the world more interested in putting their neck on the line. But we'll have to see how things develop. If I were a large cap name right now, I'd be looking at these little gold stocks more than anything. I just can't believe the valuations in these stocks. In full disclosure, Paul, we're about 41% in gold stocks right now in our portfolio. We're not just a gold and silver product, as you know. We look at gold, silver, copper, nickel, everything. But I think right now with this overweight to gold equities, it's really going to pay off for us because the gold price has just been extremely resilient.
John, before I let you go, you have a conference coming up in a couple of weeks' time, and I'll see you there in Fort Lauderdale. Why don't you tell us a little bit about that?
Yeah, we're excited to have you, Paul. It's going to be October 20th through the 22nd at the Four Seasons in Fort Lauderdale. For those that are watching the horrific hurricane news, that general area, Miami and Fort Lauderdale, is south of the epicenter, so we don't expect the conference to be canceled. We are going to have 35 companies there, and we'll also have probably like 50 to 100 investors, Paul. It's not going to be a large conference because I wanted this to really be meaningful for both the company and the investor, right? So they can build relationships and have significant conversation time as opposed to just speaker after speaker or booth time like a lot of these conferences are built. So we will have some presentations. We'll have Don Durrett, who you know from goldstockdata.com, who has actually never presented at a conference before, he told me yesterday. So I'm really excited that this is his first one. He's going to be talking about his investment process, right? And spending 40 minutes at the front of the room talking about his 10-step process for investing in stocks. As you may know, he's an analyst for Larry Leopard. Larry's one of the biggest, PMs in the US. And these guys have hundreds of thousands of followers, and it's like, if they're going to be at the conference, why wouldn't an investor check this out, right? We're not going to be doing live streaming. We're just going to say, hey, here's the conference. Hopefully you guys can attend. If you can't, we're going to do it again in May. But I think next year, Paul, we'll get a tremendous reaction to attending more of these things because investors will be just that much more interested.
Well, I'm looking forward to being there and seeing you in person. That's it for this week, though. John, thank you very much for joining me today.
Of course. Thanks a lot, Paul.
And as I said at the top, if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.